around us is always saying that we should buy real estate. And we all thought that when we grow up, we can easily afford a few apartments. You can rent out some apartments, receive a good rent, and live on that money. Sounds like a dream, doesn't it? But the reality is quite different. Real estate prices are always rising, and not every person with an average salary can afford an apartment for $100,000 or $200,000. In Europe, prices for 1 square meter can start from few $1,000s. Even a small studio apartment or 40 or 50 square meter will cost you a lot of money. And what to do? Many people decide to take out a mortgage. But even to make a mortgage, you need to pay at least 20% of the cost of the apartment. You also need a huge number of documents. For most people, this is not an option at all. Well, what should we do? It is possible to start investing in property if you only have $100. In this video, I will talk about the best option to invest in real estate without a lot of capital. We are going to talk to you about the REIT, ETF, and crowdfunding. Now, these words and abbreviations may seem pretty complicated to you, but trust me, by the end of this video, you'll be able to figure it all out. Let's start with REITs. Buying real estate the traditional way needs a large initial investment. Brings little return on investment, you'll still have to keep an eye on the apartment or house. The return on such an investment can take a long time to materialize. As an alternative, you can consider investment in REIT funds. What these funds are and how you can make money on them, I will explain now. In simple words, REITs are funds that attract investment and buy real estate for this money. And when the real estate brings in money, the funds divide the money among the investors. Now, let's get into more detail. REIT funds, which stands for Real Estate Investment Trust, it's in a business of managing real estate for owning mortgage-backed securities. These funds earn income for building or buying real estate properties for the purpose of renting or selling them. In addition, they invest in mortgage-backed securities. For profits that a REIT fund generate are distributed to shareholders in a form of dividends. I'll explain a little later what dividends are. REITs allow everyone to become a real estate investor, similar to how people buy shares or companies in other industries. So, how do REIT funds generate profits? Most of them operate on a clear and easy to understand business model. They rent out real estate properties, generating a stable income in the form of rent. This income is then shared with shareholders in the form of dividends. So, how you can make money from REIT fund. And the last method for today is investing in ETFs. Imagine you have 10 different apartments and you want to invest in each of them, but your budget is limited. In this situation, you might consider buying an ETF that combines all 10 of these properties. This will allow you to spread your investment across multiple properties, even with limited funds. This will help you diversify your portfolio. Real estate remains one of the most sought after and profitable investment options, attracting many people. However, as I mentioned earlier, buying and owning physical real estate can be very costly. This is why some investors prefer to invest in real estate through exchanges traded funds, like ETFs. These funds are a collection of securities from different companies. Real estate ETFs invest in companies that are in business of owning, managing, or financing real estate. These companies are known as REITs, which we have already discussed. These estate ETFs works on the same principles as other ETFs. This is a trading on stock exchanges and can be bought and sold throughout the day. Investors purchase shares of these funds through a brokerage account, similar to buying regular stocks. In investments through ETFs, there are two main ways to earn money similar to those available in REITs. The first is dividends. Dividends from ETFs can be paid monthly, quarterly, semi-annually, or otherwise. This provides a great passive income opportunity. You buy an ETF once and then make regular profit. The second way to make money is by buying and selling. You can buy an ETF at one price and sell it at another. You can do this even with a short period of time, such as in a minute. Now, let's look at the pros and cons of such investments. The positive sides include a low entry threshold. You don't need to have tens of thousands of dollars to start. A small amount is enough. Secondly, ETFs allow you to create a stable passive income, which is especially convenient for long-term investments. Third, you can sell your shares at any time, which is useful in case unexpected circumstances and the need for emergency funds. Give us a like and subscribe, and I'll see you in the next video.